On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. G'day team, hope everyone is well. Another busy week looms with the Reserve Bank decision here in New Zealand taking centre stage. We'll get to that, but first let's run through everything else that happened across financial markets last week. It was a good week for most global share markets. The S&P 500 index in the US rebounding 1.5% following 2 weeks of declines. Investors were rattled midweek by a hotter than expected US inflation report. But later in the week, we saw a soft retail sales report that came out on Friday, and that did revive bets for further rate cuts from the Federal Reserve. We'll talk about that inflation report soon enough. But in the meantime, European and UK stocks continuing to rise. They were up 2.2% and 0.4% respectively for the week, hitting new all-time highs in the process. So European shares are now up more than 10% already this year, easily outpacing other markets around the world. Meanwhile, across the Tasman, the ASX 200 added 0.5%, the local NZX 50 rose 0.7%, so it was a pretty good week across the board. Interest rates were little changed from a week earlier, with the 10-year Treasury yield in the US finishing the week just shy of 4.5%. It did rise more than that after that inflation report, which came out on Wednesday last week, but then it sort of fell back when you had that weaker retail sales report, so it ended up being not too dissimilar to where it started the week. Locally, the 5-year swap rate did increase slightly. It was up 9 basis points to 3.75%. It might fall back a little bit on Monday morning because that Friday news in the US did see yields over there fall back and we were closed. So we might play a little bit of catch up on Monday morning. Right, looking back at the key events from last week, and the main one that investors were focused on was the January US inflation report. Hotter than expected inflation. The headline consumer price index up 0.5%, 0.5% for the month, well above forecasts, which were for 0.3%. And that's actually the highest that we've seen in 17 months. So it saw the annual headline CPI inflation rate push up to 3% for the first time since June last year. Markets were expecting 2.9, and I did say a week ago, if you get an upside surprise and you hit that 3, that might just spook people, because we'll be in that psychological zone of in the 3s now versus being in the 2s, even though it's only a very small change. So 3%, first time since June last year, still a long way below that 41-year high of 9.1% that we saw back in 2022, extremely high. So we've come all the way down to 3% now, but it has been rising again for the past few months because it fell back as low as 2.4% in September last year. Now it's drifted higher to 3%. The core CPI also higher than expected. It's running at an annual rate of 3.3%. That's pretty close to where it's been for 6 or 7 months, so it hasn't really moved from that level. Markets still see 1 or 2 rate cuts from the Fed this year, and pricing implies that June or July will be the most likely timing for the next move. So in the wake of that report, markets actually moved back to seeing only the 1 cut, but then you got that softer retail sales report, and that just pushed things back the other direction. So now we're back to 1, maybe 2, probably 2, I think, as far as the pricing looks. But inflation definitely in the spotlight in the US last week. Right, turning to this week, it will be a holiday-shortened week stateside in America. Markets are closed for the President's Day holiday on Monday. I think that's actually officially called Washington's birthday, isn't it, after George Washington? So markets closed on Monday, so they won't open till Tuesday in the US. This week's economic highlight in a global sense will be the global flash PMIs for February. These are out on Friday, so we'll get the Australian measure first. Comes out 11 o'clock New Zealand time, Friday morning. morning, the Japanese one at 1:30 that afternoon, and then overnight that night and into the early hours of Saturday morning, you'll get the PMIs for the UK, Europe, and the US. PMI stands for Purchasing Managers Index. These are essentially activity indicators. The reason I like to watch these quite closely is they tend to be one of the very first things you get out each month. So all the other economic data you get tends to be a bit dated. You sort of get it after the fact, but these are hot off the press. They're survey based, which means they aren't perfect, but it does mean they're very, very timely. So these will cover February, so they're very up to the minute. So these are out on Friday or overnight on Friday. Last month they looked good. All measures pointed to the global economy starting the year on a pretty sound footing. So the PMIs for January were very solid. All of the major regions were above the break-even level, which is 50, so all above 50. And the composite PMIs for Europe, Japan, Australia, and the UK all rose to between 3 and 5 month highs. So composite PMIs mean they encompass both the manufacturing and the services sectors as well. You get those figures individually, but I like the composite measure because it sort of gives you an aggregate and you get that total view. So Europe, Japan, Aussie, and the UK all increasing to 3, 4, or 5 month highs. US activity softened, so it went in the other direction. However, it did remain very solid, and importantly, we saw a return to growth in the US manufacturing sector for the first time in 6 months, and that was compounded by a good showing from the ISM manufacturing survey too for January. So we'll be watching for evidence that this strength has continued as well, because you get these flash PMIs first and then you get the ISM second. So if we see that strength continue into February, it will probably tell us that the ISM manufacturing index for February, which will come out in a week or two's time, might look good too, and that would be a very positive sign. So that is the key release when you look out there across the world. Other than that, it is a relatively quiet week. However, there will be plenty of action in this part of the world for investors to monitor. So here in New Zealand, what are we watching? Well, early Wednesday morning, the results of the latest global dairy trade auction are out, and we'll be hoping for more of the same. A fortnight ago, headline prices rose another 3.7%. That was the strongest gain since early November. And we saw another strong showing from whole milk powder, which was up 4.1%. So after an almost 19% rise last year, 2024, the GDT index is up another 3.7% in 2025. So prices sitting at the highest level since July 2022. That $10 payout from Fonterra looks to be locked in. So now it's just a question of, do we sort of push a little bit higher than that? Do we get to 10.50 or more? Let's wait and see. But dairy prices Wednesday morning. We're also expecting at some point a housing market update from the Real Estate Institute. We should get the report for January sometime this week. Be watching for any signs of recovery there after a pretty soft finish to 2024. Volumes were down. The number of houses sold was not much higher than it was the same month a year ago. The days to sell sitting at 40 in Auckland, 42 elsewhere, so not particularly strong in terms of market activity, and prices pretty weak as well. The National House Price Index fell in December, and it was down a little more than 1% in 2024. So the housing market's still very subdued, but at some point you would think lower mortgage rates would just start to give it a little bit of a boost. So that could be out this week, and we'll be keeping an eye out for it. Right, the main event, though, will be the Reserve Bank decision, and that will be out on Wednesday afternoon. So at 2 o'clock, we will get the OCR decision, the official cash rate decision, and we will also get the latest monetary policy statement, MPS, and that is the set of forecasts and projections and information that they give us periodically. So that all comes out at 2 o'clock. And then there will be a press conference at 3 o'clock that you can tune into and see the governor and his team talk and take questions from journalists. Now, the Reserve Bank has cut rates 3 times this cycle, beginning in August last year, and that came after the OCR spent more than a year at 5.5%, which was the highest level we'd seen in 15 years. So it was at 5.5% for over a year. Then we saw 3 cuts, I think, last year. That has taken it to 4.25%. So we've seen a couple of 50s. This week we're expecting another 50, another 0.5% cut. That would take the OCR down to 3.75%, well down from that peak of 5.5% and the lowest since late 2022. Now, this is expected to be the last cut of that magnitude, the last big one, the last 50. So from here on, after this week, the Reserve Bank is expected to keep cutting, but only by 25 basis points each time. And at the moment, financial markets expect the official cash rate to settle at about 3% by the second half of this year. So 3.75% by the end of this week, and then there's maybe 2 or 3 more moves of 25 basis points each, and then you end up at about 3. But we will be looking at the MPS projections to see if that is still what the Reserve Bank is guiding us to, because a lot can happen in the space of a few months. So that will be the highlight of the week on Wednesday afternoon. A day earlier, you'll almost get something that could be more interesting, the Reserve Bank of Australia. And this will be not as relevant for us here in New Zealand because it's across the Tasman. But the reason I say more interesting is because they haven't cut rates at all this cycle. The Reserve Bank of Australia has stubbornly left its cash rate at 4.35%, which is the highest since 2011, and it's been there since late 2023. They were sort of late to the party raising interest rates compared to others, and they've been late to the party cutting them as well. So they're definitely lagging behind the likes of the Reserve Bank of New Zealand, the Federal Reserve, the Bank of England, the European Central Bank. But that might all change this week with the first rate cut across the Tasman since November 2020, the first since during that COVID period. A softer December quarter inflation report saw the inflation rate fall to 2.4% at the end of last year. That's the lowest in almost 4 years. It was slightly below forecasts, and that's what's opened the door for the rate cut that we're all expecting this week, the first one this cycle from the RBA. So if you get a 25 basis point cut this week, markets then see 2 further cuts of 25 basis points over the balance of this year. So in total, 75 basis points in 2025, but we'll wait and see. That's on Tuesday afternoon. Also plenty going on in terms of the reporting season. Now, internationally, it is starting to wind down. More than 3/4 of S&P 500 companies have already reported this quarter, and it's been pretty solid. The S&P 500 has posted earnings growth of 16.9% annual earnings growth in that December quarter. That's the best that we've seen since 2021, and it's well above that original estimate from before the reporting season started of 11.7. So people were expecting it to be about 12. It's coming at almost 17. Not bad at all. Still a few more to come this week, though. We will hear from Walmart in the US. What day are they reporting? Walmart is on Thursday. A couple of big Chinese companies, tech companies, Alibaba, that's also on Thursday. Baidu, that's on Tuesday. Schneider Electric in Europe on Thursday. Air Liquide on Friday in Europe. So a few things to watch internationally. But it really does heat up in this part of the world. In New Zealand and Australia, there is a lot going on in terms of corporate releases. Here in NZ, things will kick off on Monday morning with A2 Milk, Contact and Freightways. Wednesday, EBOS and Fletcher Building. Thursday, Air New Zealand, Auckland Airport, Sky City. Friday, the NZX, Sky TV, Spark. I did record a podcast episode about what I'm expecting from the reporting season, so hunt that one down. It's the one before this one, so look that up and you can hear my more considered thoughts about what to expect through the reporting season. Across the Tasman, a lot going on too. On Monday, we'll get Lend-Lease. Later in the week, you've got some of the real heavyweights reporting results. BHP Group, Cleanaway, Hardies, Rio Tinto, Brambles, Telstra, Transurban, Wesfarmers, QBE, so really something for everyone. So that's it for this week. Enjoy it, and we'll talk again soon. Thanks for listening, team.
For more insights, visit craigsip.com.